We start off with an earnings alert on two major tech titans, Facebook and Microsoft, both on the move after reporting earnings. And we've got full team coverage lined up for you. Josh Lipton standing by on Microsoft. Loop Ventures' Gene Munster's gearing up for Facebook's call. We kick things off, though, with Julia Boorstin for more on Facebook's big quarter. Julia, quite a move.
Quite a move, Melissa. Facebook shares up more than 10% on better than expected revenue and user growth. CFO Dave Wehner reassuring investors by saying that while the outlook is uncertain, advertising is stabilizing so far in April.
We're not immune to this from this crisis. We did see a steep decline in advertising revenue starting at about the first week of March, and that sort of continued. Now we've seen some more recent stabilization. As part of the earnings release, we did include information about the first 3 weeks of advertising performance in Q2, so in April, and that's about flat year over year.
Facebook also lowering its expense guidance for the year to between $52 billion and $56 billion, down from a $54 billion to $59 billion range, as the company spends less on travel, events, and marketing, as well as slower headcount growth. Now, while Facebook's user growth and engagement did surpass expectations, with 2.36 billion people using one of its apps every single day, the company does warn that they will lose at least some of that increased engagement when the stay-at-home orders are lifted. Melissa, back over to you.
All right, Julia, thank you. Julia Boorstin. So we go to Guy Adami first. This is an extraordinary move in the after-hour session. Let's be clear. Between Facebook and Microsoft, we are talking about 7.4% of the S&P 500. Ripping higher in the after-hour session.
Staggering move on top of what has been a staggering move. So now the question is, how do you trade it? I think the all-time high was 224 and change back in January. It absolutely feels like it wants to go there. You know, looking at it, and Tim can speak to this, I mean, ARPU, and Tim can fill you in on what that is, but that was better than expected, 696 versus 689, and operating margins were a little light. So in the aggregate, I think it's a really good quarter. I think it trades back to 225, and then you have to take a powder, I think, and see what happens. Listen, if you listen to them carefully, they said we're not immune from the potential reduction in ad spend. So I think if it gets that 225 level, you pull the ripcord and live to fight another day, Melms.
Not immune, but to think that the most recent 3 weeks in April were flat year on year. I mean, that is extraordinary to think that basically year on year, it's the same, Tim.
Yeah, I would have definitely. You have to flag that number. It's amazing to think that they're flat, and that so this is more than stabilization. This is really actually seeing no change in their business. If you look at the engagement, that was up a little over 9%. Guy pointed out those average revenue per user metrics, which are really important. So I think you get back to a place with Facebook, and you decide what multiple you need to put on the stock, because relative to itself, Facebook here is somewhere 27, 28 times for a stock that's been trading 21, 22 times over the last couple of years. So this has been a V-shaped recovery. Let's be very clear. This stock is now up through where we were kind of Feb 21 with this after hours move. So you start to wonder the delayed response to ad revenues, which we have to expect. It's one thing to have that stabilization, but to expect that the advertising revenue trends are going to hold in there, and this is one of the first stocks people want to go to. It's part of the reason why the reaction's been so strong, because this is extraordinary in the short run, but I'm not sure you want to chase the stock here.
I mean, Wedbush was flagging that earlier this week, I believe, in its note, saying that they expect for the rest of the year ad budgets to continue to go down, which seems like a fair assumption. But Karen, if you think that Facebook is the place to be, then maybe ad budgets go down, and relatively speaking, Facebook still gets a big piece of that pie.
Right, or they go down less. I mean, the flat year over year is pretty amazing. But just when I step back and think about what were some of the things that were weighing on Facebook before the pandemic, it was revenue growth, the pace of revenue growth, which I think they've addressed really nicely here, considering the global environment. And then it was also expenses, which oddly from this, they're actually going to be able to reduce expenses. And then the third thing was the political climate surrounding Facebook and others on privacy and issues like that. And what antitrust sort of actions would be taken. I think those latter ones are almost completely gone. So if you remove that headwind from them and think, all right, they were flat in April, year over year. So if just a year later, and this is where they are, I think that's pretty good. So, I'm long. I do think it's been quite a sharp, very sharp rebound. That makes me a little hesitant, but I think this shows just the power of that business. And remember, balance sheets like theirs, like Google's, like Microsoft's, are where you want to be. So I'm going to hang on to it. I think I'd love to hear what they say on the call. I'm very impressed so far.
The context of the move, Pete, I think that's important to keep in mind, and that is it's bounced significantly off of the March 23rd lows, up near 20% or so. It was up 6% in the regular session today, and then in the after hours is up another 10%. So where are we right now in terms of Facebook's valuation and what it is? I mean, I think investors are assuming that flat year on year for the most recent 3 weeks means the coast is clear. I'm not sure if that's really what we should be believing right now.
I don't know that it's the coast is clear, Mel, but I think what we're seeing here, and everybody's using the word stabilized, and that's because that's the word that was given to us. And quite honestly, when we look at the stabilization, yes, that's really important, because are they really absolutely exploding to the upside? No, but they're growing when people wouldn't expect them to. And I think part of that is because we talk about the verticals all the time. So when we talk about the verticals, it's not just a Facebook story. It's the other companies within Facebook. So it's Instagram, it's WhatsApp, it's Messenger. The usage growth in those throughout the month of March was absolutely astronomical. So the strength that we're seeing in all the verticals. Oh, and by the way, the idea that they want to go in competition with Zoom and the effects that had almost immediately in terms of Zoom stock price versus Facebook's, I think that says a lot about who they are. And I think a lot of that has to do with something Karen pointed out. It's the balance sheet. When you got that kind of cash flow that they've got, and you've got all of that cash that they've already got on the books, and now that's over $60 billion, plus very minimal debt, this is a company that makes so much sense. It's why so many have been flocking towards it. It's why it had made this big move off of the lows before this earnings report. Now, to Tim's point, though, I would agree. I don't know that you want to chase it here. But with the 224 high or thereabouts, I think you're looking at a stock that's really traded almost to perfection. So I feel like there's more room to the downside from here than the upside. Doesn't mean I'm going to sell out of my position, but I certainly don't think I'm going to be doing any adding, or if I wasn't in the stock, this is not the time that I would be approaching it to try to put in a new position. I think this is something where you manage a position, but I don't think this is time for a new position right now here.